Okay, good morning, ladies and gentlemen. We're about to start the presentation of our Global Energy Review webinar. With us this morning, Dr. Fatih Birol, the IEA Executive Director, and Laura Kotzi, our Chief Energy Modeler and the main lead author of this report, which was a real inter-agency effort here. The presentations, we'll have presentations by Dr. Birol and Ms. Kotzi for about 15 minutes, and we will have time for some questions. After that, please remember to send your questions in the Q&A box on your screen. We hope to wrap everything in about half an hour. So with that, I will turn it to Dr. Birol for an introduction. Fatih, the floor is yours.
Jad, good morning, dear colleagues. The energy world is going through very uncertain days, and as the Global Energy Authority, International Energy Agency, is on one hand trying to shed light on the energy world, what is going on, what are the dynamics, and on the other hand, using its convening power, working with many governments around the world and the energy industry, trying to bring the energy world on a sustainable, on a resilient path. In that context, we have just released this morning our Global Energy Review, which looks at what happens this year in the global energy markets and what are the likely implications. This is my colleague, Mrs. Laura Kotzi, who is our Chief Energy Modeler, will tell you in detail, but our work, the beauty of the work is that more than 100 days of data is included in our projections. So 100 plus days is data already happened, and the 200 plus days is our projections based on a U-shaped global economic recovery and the gradual easing of lockdowns across the most of the world. I want to highlight you a few things. First of all, this is a big shock when we look at our numbers to a global energy system. Global energy demand declines 6%, which means 7 times larger than the drop during the 2009 financial crisis. Electricity, we understood how essential the electricity to all of us is during these confinement days, and electricity, how we use electricity, the level of electricity, how much electricity we use, and the shape of electricity curve during the weekdays in the last few months is like a typical Sunday in a before coronavirus issue. And within the electricity, one important element is that for the first time we are seeing 2019 and 2020, the low carbon electricity generation, namely renewables plus nuclear, is the #1 source of electricity generation in the world, overtaking coal for the first time in the history. When I say coal, a huge decline coming from China, India, but also from United States and Europe. From China and India, mainly as a result of the weak electricity consumption. From United States, in addition to that, the cheap natural gas plays a very important role. And in Europe, the renewable growth driven by the government policies played a very important role to see a big fall in the global coal demand, the biggest in the last 75 years. When we come to the natural gas, we are also seeing a huge decline since the natural gas industry was developed. We have never seen such a big decline, about 5%, and this is happening almost all the countries around the world, and in terms of especially in the electricity generation, but also for the industrial sector. While all the fuels are going down, we are seeing that the renewables are the only energy source that will grow. Wind and solar, especially wind. And the biggest growth in renewables comes from the United States, followed by other countries. Nuclear energy grows, nuclear energy declines, but much less than others. And we see about 3% decline in the global nuclear electricity, mainly driven by the depressed electricity demand. Finally, I want to finish by telling you that we have seen the effects also on the global emissions. The global emissions decline the largest in the history. But in my view, it is not a historic success because it is happening for the wrong reasons, resulting from thousands of premature deaths and the economic trauma around the world. This is not a reason for me to celebrate. In order to sustain this, the emissions going down, we need right government policies. This decline of emissions brought erased the emissions growth in the world in the last 10 years. In 1 year, what happened this year will erase the growth in global emission in the last 10 years. And the biggest decline in global CO2 emissions, like last year, came from the United States. I finish here by saying where I started. It is when I look at these numbers that my colleague, Mrs. Kozi, and her colleagues put together, this is nothing less than a major shock to global energy system, and the implications of this shock will be felt throughout the energy industry for many years to come. Mr. Murat, I stop here.
Thank you very much. And now we can turn to Laura Kozi and for her presentation. Thank you very much, Shafat.
Thank you very much, Jad, and thank you very much, Dr. Birol. So, dear colleagues, I will take you very briefly through the main findings of this report. And basically, what we have done are two things. First, we have been tracking, as Dr. Birol said, what has been happening over the past 100 days. And let me start with the following. Basically, we have started checking how much of the global energy market has been in lockdown over the past 3 months. And if you see how the crisis has unfolded, at the beginning, China, Wuhan and Hubei were shut down. This meant that basically only 5% of global energy demand was affected by some mandatory lockdowns. What really changed the data and the reality here is when the virus started to spread to Europe, India, and the United States, and basically starting mid-March, the share of global energy use that was affected by mandatory lockdowns jumped from around 5% to more than half of global energy markets. Basically today, as we speak, we are right in the middle of the storm with 50% of global energy use being affected by mandatory lockdowns. How are those affecting energy use? There are basically 3 main channels. The first one is through electricity. We have been checking basically country by country what's happening to electricity demand as a country moves into lockdown. And what we find, adjusting for weather and understanding what is the real impact of COVID and lockdown measures, is very clear. Demand for electricity, despite the surge in residential demand that we are having because we work from home, because our kids are being schooled at home, etc., this increase in the residential demand is not enough to offset the slump in activity in the service sector, in the industrial sector. As Dr. Birol mentioned, basically, all countries are bottoming up and plateauing at levels that were typical levels of Sunday's pre-crisis. This is true in advanced economies, is true in developing economies, is true. India is the example. Do we see a light at the end of the tunnel? If we look at China, we are starting seeing just now a small recovery as lockdown measures are eased. One key finding of this report is basically that service-based economies are suffering more than others in terms of shutting down electricity usage. When we put together the electricity use and the two other main channels, which is the slump in transport demand. Today, as we speak, we've just checked, road transport demand globally is down 50% compared to normal use. So if you take electricity, the slump in road transport and economic activity, we have put together what does it mean every week of lockdown for energy use. And the findings are the following. If a country is just putting in place limited restrictions, for example, canceling a big sports event, then the weekly impact on energy demand is rather limited, around 7%. Things become more serious when we start having lockdown of schools, for example, of parts of the population that are not allowed to move. Very consistently, we're seeing around 17% of weekly reduction. Of course, the major impact on energy demand is coming when a country goes into full lockdown, and this is cutting 25% of energy use every week. This basically means that every full week of global lockdown is cutting global energy demand by 1.5% additionally. So looking at what has happened over Q1, over the month of April, to date, energy demand globally has shrunk already by 2.5%. Looking ahead, what we have done, we have taken some assumptions in terms of how the economy will resume. It will resume slowly, U-shape. Lockdown measures will be eased, but slowly. We are not opening up our economies from one day to the next. And the result is the following. Basically, we're going to see a contraction in global energy use, which is something that we have not seen for the past 70 years. It's huge, 7 times larger than what we've seen during the financial crisis. And if we look at the speed at which these shock waves have come, basically in a span of a month, and the spread global, this is truly an unprecedented crisis. If we look at fuels, basically, as Dr. Birol already mentioned, we are seeing a big slump for coal, for natural gas, and for oil. Coal is being hit in several ways. Electricity demand is going down. Coal-based economies are suffering as their industrial production is shrinking. And cheap natural gas is really eating up some of the coal portion. Oil has been already very widely discussed in our OMR. Natural gas has been more sheltered than other fuels, and we are expecting this to remain so because the abundance of LNG around the world is providing a cushion with very, very low gas prices at below $2 MMBtu. Nuclear was mentioned by Dr. Birol, and here the surprise for us too was really seeing renewables very much like our youngsters in our societies that are proving more immune than others to COVID. Renewables are behaving exactly the same way. They're being more immune. We can see in a second why do we think it's the case. Electricity is being shaken. We have seen why. We are in lockdowns. All countries are seeing declines, and this is, I would say, the novelty compared to crises that we have seen before. During the financial crisis, United States and Europe have seen a slump in electricity demand. For emerging economies, this is the first time that we are really seeing demand declining. This is happening in China, it's happening in India, it's happening throughout the developing world. This is putting at risk the expansion of the electricity networks in those countries, with electricity being remanded in our economy as being more and more the backbone of our daily life with digitalization and health and so on. Now, while we are seeing these shockwaves on the demand, supply is changing very rapidly. Dr. Birol mentioned this already, but for many, many years, coal has been the king of power generation. And already last year, 2019, we have seen low carbon overtaking coal in global electricity generation. Thanks to what? Basically thanks to wind, hydro, solar that are ramping up very quickly with strong additions that happened last year as well. Over 100 gigawatts of solar were installed, over 60 gigawatts of wind, most of it towards the end of the year, and throughout 2020, we will be benefiting from these additions that are coming through the grids with preferential rates and very cheap. I will conclude with showing what are the implications for CO2 emissions. Basically, we are going to see a very significant lump, 2.6 gigatons of reduction. To give you an idea of how much are we talking about, if you look at the historic growth of CO2 emissions post-World War II, you put together all the declines that we have had since, you multiply that by 2, and this is the type of decline we're going to see this year. It is huge. However, very little of it is going to be structural. As economic activity will resume, we are also expecting CO2 emissions to go up again. And I would conclude here. Thank you very much.
Thank you very much, Laura. I'm going to turn once again to Dr. Birol, Fatih, if you want to make some concluding remarks. Otherwise, we'll open the session for questions.
Why don't we start with the questions?
No problem. So please, everyone, if you would please send us your questions in the chat box. We're just going to take just a minute to let you send the questions, and then we will be back online in a minute. Thank you. Okay, so we're back. I'm going to read. We've been getting quite a few questions. I'm going to maybe just pair them or put them together so that we can try to go through a number of them. Starting with a number of questions on the oil market. I'll just read a couple of them. So is the worst of the oil demand destruction behind us as we move beyond April? What signs of recovery are you seeing now? This is from Grant Smith. A second question from Grant: how much supply outside of OPEC Plus has now been halted? Can you give an update on the figures that we gave out in the OMR? And then one question maybe also for Fatih, for you: can the emissions reduction be sustained? This question from Sumya Sarkar. Fatih, your mic is open if you want to take those three questions first.
Okay, I can start with the oil questions maybe. First of all, there is a lot of attention on what the OPEC Plus countries going to do. Are they going to make further cuts or not? What are the positions of Saudi Arabia and Russia? And this is, of course, very legitimate to look at it when we look at the global oil markets. But as I said several times before, during, and after the G20 meeting, there will be cuts in the oil production from non-OPEC Plus countries, and those reductions may well be similar to the reductions that will be coming from the OPEC Plus countries throughout the year. We are not yet there, but we are seeing that, for example, the United States, Canada, North Sea, we received the message from Norway, who also participated in the G20 meeting. But I would expect that the reductions coming from the countries where the oil markets are run by the private companies will not be at a level that one should underestimate. This is one. In terms of the demand, it will be more depending on the lifting of the lockdowns than the economic activity, because about 2/3 of the oil consumption comes from the transportation sector, and therefore it will be rather a gradual and slow recovery of demand. We expect demand decline will continue throughout this year. For the briefly on the emissions, I said it is a historic decline of emissions, but it is not a historic success. because it didn't happen because as a result of right energy or climate policies, but it is happening because of the coronavirus. So important thing is not to see a major rebound. In the year 2009, after the financial crisis, global emissions declined 0.4 gigaton, but in the year 2010, they rebounded, increased 1.7 gigaton, 4 times higher than the previous year, and it was the highest increase in the history. So what will happen in 2021, 2022, 2023 will be extremely important. It is the reason IEA was the first in the world who made a call to governments around the world to put the clean energy technologies at the heart of the recovery packages. So this is very important. What kind of recovery packages in North America, Europe, India, and China, whether or not we will see a strong rebound like we have seen in 2010, or we are going to see a continuation of a sustainable emission path. Thank you.
Okay, great. Thank you very much, Fatih. I'm going to direct some questions to Laura now. Just to give you a heads up, I'm going to read you, Laura, a couple of questions. First one is just methodology. What are the assumptions behind our projections? If you could give us a bit of flavor of that. This is a question from Klaus Hecking. We also have a question specifically on India from Lou Del Bello. Can you expand on the consequences of this crisis on grid expansion efforts in India and more generally on the developing world? Laura, your microphone is open.
Thank you, Jad. So with regards to the assumptions, basically the analysis we have done is the following. We have started from end of April, taking the data for the first 4 months. And we have analyzed a scenario that assumes a very gradual opening up of lockdowns, the countries that are currently in lockdown, with a U-shaped, very slow economic recovery. This is basically looking at the global contraction in GDP around 6%, very much in line with what the IMF has put forward in terms of their long lockdown case. There are possibilities of lower or higher energy or CO2 emission reduction. The main uncertainty that we see in terms of going lower is the possibility of new containment measure coming up maybe in the autumn. And on the positive side, we would be very happily surprised and happy to see a more V-shaped type of economic recovery that would impact less energy use. Our assessment is that if we were to see something like the 3% decline that the IMF is seeing, the energy use and CO2 emissions reduction that we're seeing would be more or less cut by half. In terms of India, what we're seeing currently in India is quite unique. India is the country that has seen the largest impact on travel. Currently, India road transport is at 20% their normal level. So a huge impact on oil, but also a huge impact on electricity. India is currently at 25% less electricity demand that would be seen normally. This is having very dramatic implications for their electricity companies, with very low amount of revenues coming into the pocket of those companies that are already in difficult financial conditions. We are seeing the governments already taking actions, but clearly it's going to be a very, very difficult year to navigate for a country that is expected to invest a lot in grids, in new capacity as demand will start again, and that has a very, very ambitious renewables plan for which grids are going to be essential in terms of integration. So we are watching this very closely and supporting the Indian government as well. Just for all of the colleagues that are interested, I forgot to mention that the electricity slide that you've seen, thanks to our colleagues in the web team and our team at the IEA, we are going to update this on a weekly basis. So we'll certainly invite you to come back and check basically the health of the electricity sector and the global economy at large through our website.
Thank you very much, Laura. I'm going to take a few more questions. I'm just mindful of time, so I'm going to just read out 4 questions and maybe direct 2 to Fatih and 2 to Laura. So the first question from Alex Forbes: how much success has the IEA had in convincing governments to make stimulus packages conducive to the energy transition agenda? Second question, probably also for Fatih: is it possible, from Angela McDonald-Smith, is it possible that world energy demand never returns to, quote, normal, and that this turns out to be a real turning point for the use of fossil fuels? And then a couple of questions, probably for you, Laura. From Tom Pepper: do you believe electricity demand returned to normal patterns amid a global recession? Second one from Junior Isles: renewables are extending their lead in terms of supply. Is there something about the COVID-19 outbreak that is driving this?
So, Jet, the first question, the second question is demand, energy demand. The first one is?
First one was following our the efforts that the IEA has been making to convince
exactly.
governments about the stimulus package.
So we are working with almost all key major countries around the world, and to be very frank, they are asking our advice. This is the European countries, this is the North American countries, this is the Indonesia, India. We are working with China, South Africa. The issue is to convince those governments to put clean energy policies in the stimulus packages that will also help the job creation, improve the economy, and boost the resilience of the energy infrastructure. So we discussed with the energy ministers, but we also know that we have to convince the finance ministers. So I believe that you will see in the next weeks and months to come the IEA's visible input to many well-designed stimulus packages. We are working with many governments there. Especially investments are very important, what kind of investment they will make. And we are, in fact, on 27th of May, this next month, 27th of May, we are publishing our World Energy Investment, which looks at how the energy investments are affected: oil, gas, coal, renewables, electricity from the current crisis, and what is the outlook, the near-term outlook for it. The other question is world energy demand will stay like this, or it will rebound. I hope the global energy demand rebounds, and rebounds strongly, because energy means life. Energy means economic growth, comfort, access to better lives. Energy is good. Emissions are bad. We, as the IEA, we love energy, but we want to see emissions going down. Therefore, the issue is that we are after that the recovery from the current crisis should be a sustainable one, which brings us to an energy infrastructure which is modern, much more modern than today, which is much more resilient than today, and which is much more cleaner than today. Thank you.
Thank you very much, Fatih. Laura, the next 2 questions were for you. Let me know if you want me to repeat them.
Yeah, that'd be great, Jad, sorry.
Yeah, sure. So do you believe electricity demand returned to normal patterns, specifically on electricity, jumping off from the previous question? And the next one, renewables are extending their lead in terms of supply. Is there something about this particular outbreak, the COVID outbreak, that is driving this?
So on electricity demand, as I mentioned earlier, we're tracking this very closely. If China is an indication of what is waiting ahead for other countries, we are having signs in April that China is starting to see a positive growth, but still very much lower compared to normal times. So it's going to be a very slow, gradual recovery. And overall for the year, we're still expecting a decline in overall electricity demand. Second, for renewables, what's happening in this outbreak is a combination of two things. This is lowering electricity demand on one hand, and on the other, reason we have lower electricity demand, we want to use the cheapest option at all times possible. So grids are giving, for regulation, priority dispatch to renewables in most countries, Europe, the US, India, China, basically all of them. So they're being absorbed by the grids, which means our electricity nowadays is cleaner. Of course, if electricity demand rebounds, other forms of generation will come back online. So we are currently benefiting from installations that were made last year. Certainly, government support is going to be needed further if we want to see further growth in the year ahead.
Thank you very much, Laura. Fatih, if there's anything else you wanted to add, otherwise I think we can wrap it up.
No, just to say that there will be our annual renewable report coming out on 21st of May, which will look at the more detail this year, but also what could happen next year, 2021, on 21st of May. This is the only thing I wanted to add in terms of renewables. Thank you very much.
Okay, thank you very much. So thank you everyone for your attention. If you have any, I know we have more questions, please email them back to us at press@iea. We'll certainly answer them all today. And on your calendar item, we also have the oil market report on May 14, investment report that Fatih mentioned on May 27th, renewable on May 21st. And since you have your calendars open, we also have a World Energy Outlook special report coming out on June 18th. So a very busy schedule, and we're happy to share all our findings with you. So thank you very much. Thank you, Fatih and Laura, for the presentation. Thank you.